Joining us now with his analysis of trade at midday is Thami Netha from Shiloh Capital. Hi Thami, good to chat to you once again. I mean, this is a very strong day for resources, for miners. JSE is looking great for budget day.
Yeah, look, I think the costs haven't changed, but the price has gone up quite significantly. So that's always going to work well towards mining production. I think when you look at the management around speaking to cost versus price that you receive, fortunately in this scenario, in most cases, because miners are price takers, in this case, the price has really gone well on their end. And so they just have to manage their costs. Costs haven't changed, revenue's gone up, puts everyone in the green.
Yeah, absolutely. Now, the rand also firmer as well. I suppose it's a bit of nervousness before 2 o'clock today, but the rand, yeah, firmer than it's been.
Yeah, I think this has been happening over time. I think there's the pricing in of the fiscal discipline ahead of the budget. How we're going to look at that debt restabilization. I think we're at about 76% now. So how are we going to manage that? Energy is going to be a big thing. Spending on infrastructure versus social spend. But I think generally the US dollar has become softer globally, which has led to improved sentiment around emerging markets and the rand. So I think we hope to see some good credible consolidation, which could continue to support the rand, less fiscal slippage and spending management, and good returns from exporting, tax exports and increased production by our big mines.
Yeah. Right, it's budget day. It's also results day. So many results today. NVIDIA overnight. I mean, NVIDIA and tech stocks, the confidence is there.
Yeah, I think we've got to, in general, look at what's happening in the world of AI and moving towards AI agents. So there's definitely going to be a lot of data center growth, so which is a core issue for AI. The forward guidance on AI capex is still accelerating, so we don't really know how much is going to be spent, but it seems more and more will be spent. Margins in supply, there are margin supply constraints. So there's certain companies which are ahead of the game in that will do well. I think the key questions will be around the sustainability, the scaling of spending, especially by the big FANG stocks, and how that'll take. So there'll be a global AI super cycle, I think, which will reinforce a lot of the tech spending and the capex spending, and the risk is going to continue to grow. Risk on by investors is going to continue to grow as a result.
Yeah. Right, let's come back home. Motus, their results. Now, we've had all these Chinese vehicles coming in. They were looking at cutting salaries and staff were angry, but yet the results are up. So maybe they've kind of turned the corner a bit.
Yeah, so it's consumer pressure versus resilience in motor demand. And the consumer pressure generally moves people to go to sort of cheaper, more affordable products based on credit and value. What the Chinese products offer is a lot of value for the price that you pay. So managing that process was always going to be complex because of that interest rate sensitivity. I think a lot of South Africans are still brand loyal, so they've accepted sort of the new market entrance off the basis of price to value. But I think the volume sales will continue to grow if interest rates are not moved significantly. The margin pressure will be different, and you're going to get a lot of improvement in availability of aftermarket sales, parts for automobiles. So I would say the demand is not going to, is high rates would weaken demand, which I don't think we're going to foresee any sort of rate increases. So considerable diversification, strong cash returns. I think we're going to see some progress in Motus in managing that. Nimbility means everything when it comes to this kind of sector.
Yeah, quite right, quite right. Right, Blue Label, they took on Cell C, they took on that debt. You would have seen with Cell C's first section of their results, doing pretty well actually, I thought. And Blue Label also, well, paying out a dividend, so this looks like they've also turned the corner.
Yeah, I think with every sort of market, there's the rule of three, where there's two main competitors which sort of compete, and then there's a third entity that's always lagging behind. And that's sort of been the rule around telecoms across the globe. So what we're seeing with Cell C is not necessarily surprising, but what's important is that there's a turnaround at Cell C. So that core prepaid and distribution business, it continues to generate cash, which is the important part. And that restructuring, dealing with the debt, reduces the funding risk. And then you also restructure the balance sheet, and that risk to the balance sheet decreases. So it's a big upside opportunity for Cell C as it stabilizes, and Blue Label, more importantly, as they stabilize the situation in Cell C.
Yeah, quite right, quite right. All right, Bidcorp, their results, what you read into those?
I think they've proven themselves to be a quality defensive growth stock. If we can call it, we can ever call anything that. But it's a defensive global compounder. It continues to deliver value and gives you some good downside protection. Organic volume growth is important. They've maintained their margins amid inflation sort of starting to normalize in South Africa. They've maintained their margins. They've got a regional footprint. So good European recovery, good emerging markets growth. So good diversification, geography across the globe, strong cash generation, and they're benefiting from call it a recovery in hospitality and travel. So that's a big thing around their products and what they deliver. So I think they're a great quality defensive growth stock.
Yeah. Well, that's good. Okay, results day it is. AECI, theirs also coming out today.
Yeah, so I think that's also another restructuring story, right? They're really focused on unlocking value. I think the chairperson has really, amongst also the board, have really moved the business in the right direction with the executives. They've simplified their portfolio, disposed of not core assets. It sort of gives me the feeling when Steve Jobs came back to Apple and made that quadrant where they focused on core areas. The mining explosives business really has performed well, and I think that's linked to the commodity cycle or price upswing we're seeing. And the margin recovery is great, and they've reduced their debt. So there's a great, call it an investment case around the execution of the turnaround. So they've really refocused the business and are really looking to drive value from that. So there's a management has delivered around restructuring, and there's a re-rating sort of potential from the current base to higher.
Gosh, interesting one. Right, hold that thought. Before we move on to your stock pick, let's reflect on some counters that have found favor with your industry peers.
So PDD Holdings, this is one I've picked a couple of months ago, and it's subsequently fallen for many reasons. I think one is the global sentiment around tech. The other one is that top line growth seemed to have slowed a bit. However, it's still a quality business with high cash flow, and margins are still very, very stable. So I think once the sort of negative sentiment filters out, you can definitely see some price appreciation there.
Premier, to our mind, is really kind of the preeminent FMCG producer in South Africa. They are growing through acquisitions, notably Rhodes through RFG recently. But I think what they're doing that we really like is improving their existing capacity, and that's investing in state-of-the-art facilities. And as a result, what we've seen is actually margin growth for them in what is, we've already said, is a very competitive sector. And so, their portfolio of brands is growing. They've got really strong brands to leverage off.
Well, those are two very interesting ones. Let's start with Premier. And you saw the graph there. It's just gone up and up and up. I mean, it looks solid, the Premier Group.
Yeah, I think the acquisition strategy is great. I think they're great defensive, stable exposure stock. I think the key element would be their input cost trends and consumer affordability. I think that's where they're vulnerable. But as a business, I think the brands are great. They supply quality into the market, and I think as an FMCG producer, it's a really good business.
Yeah, right. PDD Holdings, he's talking about that one. Also, interesting, solid one.
Yeah, Pinduoduo has been a stock we've held for a while. I think they are able to deliver products at a fraction of the cost to their global competitors. So they've got high growth, but there's obviously going to be sensitivity around Chinese consumer tech exposure. So that macro uncertainty and the regulatory environment may be the key risks. But in terms of operational ability and the ability to get things done, if you just look at what has happened with Temu and the ability to deliver products globally is at a cost that's meaningful is a good business.
Yeah, very good point. Right, where are you seeing value this budget day lunchtime? Where are you hanging your hat at the moment? What's your stock pick?
Infosys, it's a leading Indian technology and digital business. They're benefiting from the ongoing global shift to automation and AI, so it makes them different. Their valuation is, I think, a fraction or much cheaper, should I say, than their peers. And they've got strong growth, cash generative, diversified client base, and they are able to capture that. So the themes around Latin America, for the likes of Mercado Libre and Southeast Asia, sort of comparatively to them, I think they offer a good emerging markets play around technology.
Yeah. Interesting choice. Thami, thank you so much. Good to chat to you this budget day lunchtime. Thanks for joining us. Do appreciate you taking the time. That was Thami Netha from Shiloh Capital.